Hi there, welcome back to my YouTube channel, Investment Mindset. Today is a beautiful Sunday. In the recent past 3 weeks, we have backed multiple winners and I did receive numerous messages on my IG thanking me and asked me to do more videos to uncover the next winner. Nothing warmed my heart more than knowing that my video has made a positive impact on others. And I have discovered a hidden gem where I would like to share my analysis with all of you, my Investment Mindset subscribers, so make sure you watch this video till the end. This counter is an oil and gas provider trading on Bursa Malaysia with ticker icon 5255. Now allow me to shed some light on this counter's background. Icon Offshore Berhad is the largest offshore support vessel provider in Malaysia and one of the largest in Southeast Asia in terms of numbers of OSVs. Icon owns and operates one of the youngest, fastest growing and most sophisticated fleets of OSVs in Southeast Asia to provide a wide range of logistical support services throughout the entire offshore oil and gas life cycle, from exploration and appraisal, field development and operation and maintenance, through to decommissioning. Icon is a Malaysia-based OSV provider and all of the vessels are Malaysian flag. This counter was last closed at 0.09 with an average volume of 8.6 million and a market cap of Ringgit Malaysia 243 million. As usual, before I choose to start any position in a small cap stock, I would definitely want to do a financial health check on this company. First, let us look at its latest balance sheet as of December 2022. Over here, we could see that Icon Offshore has a robust cash position of about Ringgit Malaysia 122 million versus its short-term debt of 23.5 million Ringgit Malaysia. From here, we could see that Icon Offshore spot a healthy current ratio of 2.93, which is crucial especially against the current backdrop of high financing interest rate environment. And one interesting point I would like to highlight is this counter is currently trading at a market cap of Ringgit Malaysia 243 million, which is way lower than its shareholder equity of Ringgit Malaysia 366 million. This means that today, should this company decided to pay off all of its total liabilities, it will still have a net assets of 366 million Ringgit Malaysia. So at current market cap of Ringgit Malaysia 243 million, this company is definitely way undervalued and oversold in my humble opinion. When I take a look at its latest profit and loss statement, fiscal year 2022, we could see that this company is an income producing company since year 2020. In fiscal year 2020, this company recorded a net income of Ringgit Malaysia 27.76 million, and in the following year 2021, it recorded a net income of Ringgit Malaysia 22.69 million, which was a reduction of 18.27%. Even though its full year revenue decreased 6% to Ringgit Malaysia 282.6 million from Ringgit Malaysia 300.6 million in fiscal year 2021, we could see that its net income for fiscal year 2022 jumped by 655% to register a net income of Ringgit Malaysia 171.5 million, after a hefty net gain of Ringgit Malaysia 196.3 million from the disposal of its sole checkup rig to Saudi Arabia-based Addis Arabia Holding. Its full year earnings per share grew to 6.34 cents from 0.84 cents in fiscal year 2021, according to the group's board's filing. Proceeds from the disposal were utilized to pay down debts and undertake a special dividend payout, which is why we could see from its latest balance sheet, its short-term debt has been reduced from Ringgit Malaysia 222.3 million to 23.5 million, and its total current liabilities has also been reduced to Ringgit Malaysia 64.2 million from a high of 270.5 million Ringgit Malaysia in fiscal year 2021. A special one-time dividend of 6.7 cents per share was also paid out on December 28 last year, with an ex-dividend date on 9 December 2022, which also explained why there was a gap down on that day. For educational purpose, usually after the declaration of a stock dividend, the stock's price often increases. However, because the stock dividend increases the number of shares outstanding while the value of the company remains stable, it dilutes the book value per common share, and the stock price will reduce accordingly. This explains why usually a stock price tends to gravitate lower on ex-dividend day. Now let us look at its latest chart. When I look at this counter, I was somehow astonished by its monthly chart pattern. This company went public listed way back in June 2014. When it first IPO, this counter was trading at around a high of 97 ringgit and 50 cents, and it has been on a gradual decline ever since then to hit a low of about 12.5 cents on January 2020. It then proceeded to make an all-time low of 0.035 cents on March 2020, which was when COVID pandemic erupted worldwide and caused all the global stock market to take a hard hit. After that, it recovered on the following month like the rest of the global stock market and has since been trading sideways within this channel. On 1st December 2022, I am happy to see a wide range bar here with a huge volume of about 508 million, and it hit an all-time low of 0.085 cents. If you find value in my video, apart from liking my video and subscribing to my channel, one of the best way you can help to support my channel is by sharing my video to as many like-minded people as possible, especially to those who are eager to learn about investing. Let us make some good money together from the stock market. Thank you. Usually when a chart is trading at the bottom range, when a wide range red bar appears, combined with huge volume, it usually indicates a reversal in trend soon thereafter, which is why on the following month we saw a reversal green bar making an upsurge to a high of 12.5 cents. And now the best part has come. On the current month, April, we could see that this counter is now bottoming back to 0.09 cents, which is very close to the previous all-time low of 0.085 cents. Now I can say for sure that this stock would definitely rebound from this level, but the probability of it doing so is on the higher side. And the best part, from the chart, I could see that the stock did attempt another final flushing down of weak hands with a super huge volume of 667 million versus its average volume of 8.6 million. And we could see that during this final hard flushing down, the lowest this stock has recorded was still at 0.085 cents. Based on this rationale, I would humbly conclude that the downside of this stock currently is rather limited. It may possibly trade lower to 0.085 cents in near future, but with lower probability. Because 0.085 cents now serve as a very strong support level, but the upside reward is way higher. And I also seen some recent positive developments on this counter. On 7th of March 2023, Icon Offshore proposed to undertake capital reduction of Icon by Ringgit Malaysia 830 million to eliminate the accumulated losses of Icon and its group subsidiaries and propose consolidation of every 5 existing ordinary share in Icon into one Icon share. These proposals are expected to be completed by the third quarter of this year. Share capital reduction does not affect the company's market value. However, it leads to a decrease in the number of shares that are outstanding and tradable. Capital reduction of share capital can be used for a number of reasons, including increasing shareholder value and producing a more efficient capital structure. The proposed share consolidation is expected to enhance the company's share capital structure and reduce the volatility of the trading price for the share. On 13 April, this company also proposed to terminate the existing share scheme of the company and in turn proposed to replace it with an establishment of a new long-term incentive plan. This slew of new events are telling me that the management of this company is serious in working to increase the shareholders' value by increasing the company's market cap and also its corresponding share price. On 29th of March this year, Icon Offshore also bagged new contracts for the provisions of offshore support vessel service from Hibiscus Oil and Gas Company Limited. On a side note, offshore support vessel operators are understood to have made some headway in their negotiation with Petroleum Nasional Berhad, in short form Petronas, to increase the cut-off age for vessel participating in the National Oil Company standard to 20 years from the existing 15 years. In view of there is a shortage of OSVs currently, so it makes sense to increase the cap. There is also talk of Icon looking to sell its OSV fleet. In December last year, the company completed the disposal of its jackup rig Perisai Pacific 101 for $85 million, which is Ringgit Malaysia 374 million to Aris Saudi Limited Company. With the new age cap at 20 years, perhaps Icon could get a better price or may even hold on to its OSVs. According to its website, the company has a fleet of 25 vessels, but 4 of the straight supply vessels and 2 anchor handling tug and supply ships are up for sale. Back of the envelope calculations indicate that the average age of Icon ship is 12 years. And so far, I see these two positive news has yet to be reflected onto the stock price. And last but not least, I saw the Managing Director Hadian bin Hashim did exercise his employee shares option on the 8th of February this year, and he further acquired another 2 million of shares on 1st of March this year at 0.095 cents. All these recent events seems to be sending a very strong signal to me, that is, to buy. So in conclusion, I would issue a buy call on this stock at current price to myself. As usual, I plan to inch into a small position on this counter when the market opens the next day. My target price to buy in ranges from 0.09 cents to 0.085. Should this stock continue to go lower in the near term, I would continue to buy the dip unless there is a change in the chart setup. Based on the monthly chart, I would expect an upside target of 0.15 cents to 0.55 cents and closing the gap it left on 9 December 2022 as well. On the nearer term, we could expect this stock to rebound to 12.5 cents at this level. As usual, before I end my video, please do not listen to any random YouTuber's financial advice, and that's including me. Instead, just use it as a guide or point of reference and continue to do your own due diligence and arrive at your own conclusion. Only you can decide where to invest your hard-earned money. And thank you for watching my video till this end. And if you have found value in my video, I would appreciate if you could like, comment and share my videos to other like-minded people like yourself who also likes to learn about stock analysis. Bye and see you again in my next video, and may the good Lord bless you and your family abundantly.